Hi, I am Kaysan Kimberlin. I'm one of the portfolio managers here at OpenCorp. I'm here today with Matt Lewison, our CEO for Property Investing Insiders. Matt, today I would love to chat about the role of coaching and having someone specialised in particular fields to help you on your investment journey. I know we're definitely in the age of coaching. You can't scroll through social media without having some sort of ad, presenting some sort of help. And I think the growth of the coaching industry has happened because people have started to understand the benefit of finding specialised people in the field. I know with property investing, there's so much that you have to learn. There's so much time that needs to go into all the particulars of the space. And even though we can have a general understanding of how those all particulars work, I would just love to chat about, I guess, the benefit of having people that specialise in each individual area and your thoughts on finding the best people for it.
Yeah, it's you're spot on. I mean, even I have had coaches as a CEO and a business person and an executive over the years, and found it was hugely beneficial from a few different perspectives. One, from having a mentor that you can bounce things past who's been there and done that, and another from somebody who pulls apart what you're doing, how you're doing it, to help you to improve and be more effective, particularly around, for instance, communication. And so I know a lot of business people who do that. Also, I guess coming from a sporting background, like I've always felt like I got the most out of myself when I had a coach. And people who knew what buttons to press to motivate you to get the most out of yourself was really important as well. But when I kind of bring it to property investment, again, probably because I started with a great mentor. Like my dad kind of took me under his wing from it when I was a teenager and showed me what I needed to do. And then once Al and I started investing, Dad was kind of there giving us kind of pointers or asking us questions at times to just make sure that we were really considering what we were doing and how we were doing it. And if we didn't have that, then we would have really floundered in the early years. So the value of that coaching that we received was so important. And that was obviously one of the things that really drove us to wanting to help other people, because we know not that many people have the privilege of having a father that they've seen go from almost nothing to growing their wealth in the space of 7 or 8 years and having that kind of first-hand view. But within property investment, I guess there's more to it than just the strategy, and there's so many different specialty skills that you need to learn over time. Like you need to learn about tax, you need to learn how to structure loans, you need to learn how to find properties, negotiate, how to research. And if that's not your core business, then it's really hard to do it competitively. And if you think about a broker who spends every minute of their day, 8 hours a week, five days a week, 52 or at least 48 weeks a year, there's thousands of hours that broker is spending trying to work out how to get the best deal for property investors. And so they're going to know that skill in that industry better than somebody who does it once every 3 years when their loan expires. And especially if they're an investment focused broker, and not all brokers are investment focused. Many are there just to try and get you the cheapest rate for your principal place of residence, or to try and get you a new car loan, or get you some consumer credit. But investment focused brokers are there to help structure your loans and get you the best structured loan to enable you to duplicate and buy another property sooner. Similarly with tax, there's accountants, there's thousands of accountants around Australia. But when you're a property investor, you have really specific needs. As a property investor, you're managing your cash flow, and you often, particularly if you're setting yourself up properly, you want to be getting your tax back every week or every month when your pay packet comes through, not 6 months after the end of financial year when you get around to doing your tax return. Because if you can get that money back in your pocket sooner through a PAYG withholding variation, then you're able to use that to contribute to funding your investments or to paying down your loan faster. And that has a compounding benefit to the interest that you ultimately pay over time. So the benefit of the right tax coach and tax partner is absolutely critical, same as property or the property investment focused finance broker. And then I guess when you take it to growing your portfolio and actually acquiring, and again, what I learned really early from my dad was that he was in the market constantly and he knew others that were, and he had a very local focus. He was focused on the southeastern suburbs of Melbourne. He knew every agent there. And sometimes deals would come to LRI and we would call Dad and say, hey, this deal comes up, it looks really good. And he'd be able to tell us, well, me and every other builder in this area has turned it down in the last 3 months. So if it's now coming to you, do you think it's a great deal? And that's, I guess, again, when you're a part-timer doing it on the side, the risk that you have is that you're trying to find a needle in a haystack and you potentially get excited about something that the experts have already turned their nose up at. So there's obviously different aspects of that coaching. It's not just about the mentorship and mindset and helping to motivate you. It can also be about how can you get the best deals from finance, from the tax, from buying a property, and make sure that you've got competitive advantage in every step.
You said a couple of things I'd love to explore. One was most brokers will just try and get you the lowest rate. Why would it be important to potentially get a bit higher rate for property investing compared to getting the lowest? Like, I don't...
Well, look, if you can get the lowest rate and the best structure for you, that's a win-win. But often the lowest rates come with constraints on, first of all, the setup, where you might be forced to cross-collateralize your investment loan with your principal place of residence, which can limit your future growth. And a really quick example, real-life example here. My dad, for all of his great skills and the things that he taught me, probably the one thing that he wasn't great at was structuring loans. He had one banking partner, and this is a very old school kind of 1980s, 1990s mindset. He had a banker that banked his business, and he took everything to that banker until the GFC. And in the GFC, he had some assets that were going up in value, and he wanted to get them revalued because he obviously wanted to buy something else. And he'd also had a holiday house that he'd built in a coastal town. And so the banker said, all right, well, if we're going to revalue these, we're also going to revalue that one. So they revalued the holiday house and then came back to him and said, we're not lending you any more money. You need to give us money because we've just revalued that and it's gone down and it's changed your LVRs. So you have to top up your equity or sell a house, essentially.
So it worked against him.
And it worked against him because he was cross-collateralized. And so it's really important to make sure you get the structure right, because that structure is going to, first of all, protect your house, also enable you flexibility on which assets you value and when. If you've got property if you're diversifying your portfolio around states, which is a really smart thing to do, then some markets are going to go up in value faster than others. Some markets might go down temporarily, or the valuers might be more conservative about those markets. And we're seeing that right now. There's valuers in some markets where they're just pessimistic. And so if you have to revalue every property in your portfolio, it's going to mean you stagnate. But if you can just cherry pick the ones that are going up in value and saying, well, I've got a property in Perth that's gone up 100,000, I can take 80,000 of that equity out, go and buy another property in Brisbane, for instance, then I have all of that advantage. And if I just went with the cheapest loan rate, which generally means you've positioned to give the bank the lowest risk possible, then you're not going to have the flexibility. So
it's so interesting, and it wasn't something I guess I learned until I came to OpenCorp and read the book and started being mentored myself by you guys, is the bank loyalty tax. That's, from my understanding, how they get people being us as the consumers, is it makes sense that you stay with someone for a long time, and because you have stayed with them, they're loyal to you. But it's actually the exact opposite, isn't it? So the more that we refinance and the more that we have our assets individually placed among financial institutes, the better off it is for us as investors. That's correct?
100%. So again, if I use that example I mentioned about my dad's kind of issues he had with his bank, and around the same time, Al and I were negotiating really hard with different lenders to get the best deals for ourselves. And Dad was shocked to find out that not only were they kind of screwing him on how they valued his portfolio, he also had an incredibly low LVR, but because he'd given them more property, they said, well, your LVR is not a target of 80% now, it's 50 or 40%. So they treated him differently. And then when we went to the bank and we weren't with them and said, give us the best loan rate, they were pricing like 1% cheaper than what Dad was paying. And he was shocked, like to the point where that was it for him. And he left the bank and started to actually like manage his loans a bit better. But it's just as bad today. In fact, if you've been with the bank for 2 years or more, there's a high probability, if you haven't refinanced your loan in the last 2 years, that you're paying about 0.7 to 1% more than somebody who turned up today to get a new loan. Yeah,
which is massive at the moment. And then just quickly, the second thing, and it's something I experience a lot as a portfolio manager. As you know, my role is just assessing people's portfolios and how they're going holding them, helping them to add to it and reach their goals. And one of the key factors that we speak about a lot at the moment is the tax variation form that you touched on. I think because interest rates were so low, rents were covering people's loans. So tax variation was just not something that was forefront of their mind, even though it's a topic that we discuss regularly. I think if you could just quickly explain basically how that works in layman's terms.
All right. So again, when I started, to give some real life examples, I would do my tax at the end of the year. And normally I'd be busy, so it'd actually take 6 to 9 months and I'd get a big lump sum back. And I thought, this is wonderful. What I found over time was that because I got a big lump sum back, you felt rich for a week and then you go and spend a bit more money. But as I started to accumulate more property, I didn't want to have to wait until then. So I started putting in a withholding tax variation, which essentially is a form that you can submit to the ATO at the start of any new financial year or at any point in time during a financial year. And you're essentially summarising your likely deductible expenses. And you're also saying, here's my current income, and you do kind of, it's like doing your tax in advance. You send that to the ATO and then they write to your employer. Say, in your payroll for this person, instead of charging, for instance, if the person was on a 27 cent in the dollar tax rate, you need to charge 12 cents in the dollar for tax. Now, I was really fortunate. There was a period of time where I was paying pretty much no tax for a few years because I was getting all of my tax deductions throughout the year. So that really improved my cash flow. And to put it in perspective, if you own one investment property today, it can be probably $1,000 to $2,000 a week difference in terms of your, $1,000 to $2,000 a month difference in terms of your take-home pay if you're getting paid monthly. So if you think about what you can do with that $1,000 to $2,000 each month, obviously it makes holding your property a lot easier. And especially in this period where, and what we see in these kind of market cycles, is that when people see interest rates going up, they start to feel a bit stretched and they panic a little bit, and then the worst thing they can do is sell their investment property. I did it once in 2007 because interest rates went up to about 9%, and it was my $750,000 mistake, because if I still had that property today, not only would it be worth $750,000 more than I sold it for, but within 12 months of me selling because of fear of the interest rate, interest rates had gone back down and the rent would have easily covered that. So I always caution people who are thinking about selling because of the market cycle or because of interest rates, going, well, if you're not using every advantage you have to manage your cash flow, do that first, because if that can help you to hold on through this cycle, we know what's coming on the other side once interest rates stabilise, because there's a massive undersupply of housing in Australia at the moment. There's huge population growth. So we know that prices are going to go up. We're already seeing them going up. So make sure that you're getting those withholding tax variations
forms in.
Yeah, sorted.
Yeah, definitely. And I think that's really the key message, isn't it? Make sure you explore all your options before you let fear take over, and make some decisions like you that you might regret.
Yeah, well, we learn from our experience.
That's it. And I think that talks to the fact that we need the right people in our corner, the right coaches, the right brokers, and also the right accountants and, experts in property investing and, people who do it all day, every day.
Yep.
Yeah, awesome. Well, I hope you guys got some great information from that. And if you have any questions, feel free to reach out and we're happy to help.